Greetings. Welcome to my weekend market recap, 18th June 2023. I'm Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID info@superiorprofit.co. I regularly share live market and stock analysis on my website superiorprofit.co, Twitter handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Now, last weekend, Dr. Jeffrey invited me to present in his event, and in that session, I talked about the success rate that one needs to swing trade profitably. I do swing trades and I think I trade profitably, as is proved by the ideas I share on the public channels before knowing the results. Now that success rate that we need is 60% or more. That is enough to get a significant percentage annual profit on total equity. And from time to time in the market recaps, I look back on the ideas I share and the trades I take probably and see how they turned out. This week I'm going to do the same and you will see whether we are talking about the unique headwind reversal setup, trend reversal trade, or a traditional breakout setup, but breakout may be from squeeze move, breakout may be from a gap with a gap, or just a simple plain trend line breakout, or we are talking about trend following flow trades. The success rate can be pretty high provided we follow a disciplined approach and we employ a 360 degrees technique where we only not look at technical analysis to find a directional trade, but we also align that trade with the market's direction. And when I say market direction, it is not necessarily the trend of the market, but our preferred trading direction. As we will see in today's session later, the market may be in an uptrend, but my preferred trading direction after many weeks may be slowly changing to bearish side. We'll look at that later, why so. And not only aligning with the market, I also align my trades with sector, industry, strength or rotation, fundamental strength, and optionally seasonality strength. The success rate of my trades and your trades, if you are following the same 360 degrees approach, is going to be significantly higher than just taking technical trades. And again, today's session will probably emphasize that fact. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Probably another secret of my success is that I use a single system. Therefore, I am not presented with possibly conflicting views that may come from using multiple systems. I use only one system. All the 360-degree components run on the Metastock platform and the technical analysis component runs on TradeStation as well. When you use multiple systems, you will have to assimilate the insights or signals provided by multiple systems and build a conclusion into your head. When I use only one system, that is already done by Q systems, and I may read the conclusion from the commentaries if I wanted to. After a while of using Q systems, we may not need the commentary, but it is there for us to read the charts exactly as I would read them when using Q Global or Metastock. Now let's continue with the live systems and show once again or see once again how the Q techniques, the 360 techniques, work out in real life. First, a quick look at the global market, starting with All Ordinaries Index of Australia. Once again, we see the power of the trend line support. I always say when there is a trend line support, I am not going to short, I am looking to long. All Ordinaries came right to the trend line support in the weekly and went up from there. In the daily, when we had the first green candle, the bullish momentum candle, we could look to buy individual fundamentally strong stocks, and 1 2 3 4 5, it has gone up for 5 days in a row. I think the last candle is today's candle, that is Monday's candle in Asia, continuing to go up. So any bullish trade taken on this day in fundamentally strong stocks with a low risk buy setup is likely to have given much more than the risk taken in the trade as profit by now. Once again, a trade taken using the concept of bounce trade and bullish momentum proved to be profitable. Now I am not going to buy it. It is quite a distance away from the recent swing low. I would have bought it at the bottom with trend line support. Next, Topix index from Japan. It was in an uptrend, as I explained in several previous market recaps, and it is continuing that. You may see the weekly backdrop has been bullish for many weeks, several months in fact. However, I am not going to buy now. It is definitely bullish, but it is too extended for me to buy. Above upper boundary with bullish stretch for 5 days in a row, and it has hit both jump and thrust high. A continued up move from here may not be sustainable. So whenever I have both jump and thrust hitting the upper extreme, jump thrust high to overbought condition, I stop buying that instrument. That will be another reason I will not buy Topix today, but it is certainly bullish. Next, China CSI 300 index, and though I am looking at the market indexes of global markets, the exact same analysis is applicable to the USA market and vice versa. When I analyze USA stocks or indexes, that same technique is applicable to global markets. For CSI 300, we once again see the value of Q analysis as I share publicly before knowing the results. When we had a series of or cluster of bullish indecision at the bottom in CSI 300, if you look back at this time, there was no bullish signal. Probably people were all bearish. But I looked at the cluster of bullish indecisions in daily and then also weekly, and I mentioned that I was not going to short China market anymore. After that came the bullish headwind, the unique reversal signal. That candle shape was still indecisive with an upper tail. Following that, we had another bullish headwind with a more bullish shape candle. And the second bullish headwind candle created a double bottom at the watermark level. It also had a bull release signal. So on this day, you had the constituents or building blocks of a headwind long trade setup as well as a box double bottom long setup on the daily chart. As you know, I don't like to trade the indexes so much because they are averages of multiple stocks, but on that day, building on my previous analysis and the headwind setup on daily, and the box setup on daily, you could and I could buy fundamentally strong stocks that were also giving low risk buy points. Once again, those trades would have given much more reward by today than risk taken in the trade. The stop would be just below the recent low. Now I am not going to buy it. Same like in the Australian market, the recent low is quite a distance away to my liking, but I would have bought right when the signals came. Is it uptrending? No. When I could buy, was it uptrending? No. And that is one way that Q techniques differ from many other techniques. We have very high probability reversal trades, be it bounce trades, headwind trades or box trades, very high probability reversal trades, as high probability trades as the trend following trades of flow as well as pullback. So we can and I do take those reversal trades with confidence whenever I have them. Next, India's Nifty 50. See how in the China market, looking at the cluster of indecisions at the low, I look to buy. And the opposite situation is happening in the Indian market. The last candle here in weekly, last candle here in daily is today's Monday's data, pre-market data. Not sure if it will confirm the cluster of indecisions in weekly, but if it does, that will be a reason not to buy anymore. And in any case, in the previous market recap also, I mentioned that there was a bearish headwind earlier in the weekly chart that resulted in a significant price drop. Now price is at the same level at the watermark created by the previous bearish headwind, and we have indecisions coming in. That is not the time to buy. Instead, I would like to look for shorting opportunities. However, daily has a trend line support. I will look for shorts with more confidence if this support is broken. By the way, weekly has a triple top also. If it can go down from here, that will create a more than average bearish picture because it will be a triple top in the weekly chart. But we are not there yet. It is still uptrending. Now in the previous market recap, when I shared this Nifty 50 chart, I also shared the other major index, Nifty Bank. And I mentioned that though Nifty 50 was holding on to the trendline support, it is still holding on to the trendline support. In Nifty Bank, that support was broken last week. There was a trendline support somewhere here. That support was broken last week, and I mentioned in the previous market recap that how could we use that information from Q charts? We would not buy banking stocks. Instead, if we are going to short any stock, we would prefer to short banking stocks, and that was very effective because though Nifty 50 did not fall much, Bank Nifty fell much more. And on Friday it regained some distance. However, now I see that there is a bigger cluster of indecisions in the weekly chart. All those are confirmed indecisions. This week's candle is just about to form today. So we have cluster of 3 indecisions at the top. Again, Bank Nifty had a bearish headwind that created a watermark resistance, pivot resistance, and we have a false upside breakout from there. What am I going to look for now in the daily? If price can come down and gives a magenta color bearish candle, daily interestingly is turning magenta, therefore a magenta candle in the daily will give a flow trend following short setup right at the top. And that is also a beauty of the Q systems. We are able to short the top using multiple setups, and as you can see, if we have a flow setup now, that will be the first trend following short setup we could take in Nifty Bank. So we may watch out for that. Bank Nifty is weaker than Nifty. And I could of course use Q Edge to see the relative strengths and weaknesses of different sectors and industries. I would like to short a banking stock when the stock itself has a low risk short setup, one of the Q setups, and that stock's industry in Q Edge is showing weakness. At the index level, banks are weaker than the broad market. Once again, my last week's analysis that Bank Nifty was weaker than Nifty worked out perfectly. Next, let's look at FTSE index. FTSE index UK market is continuing inside a range created by trendline resistance and support, and it is right in the middle of the range. That is a no trading area. I'm not going to take any directional bias in FTSE right now. That was a look at the global markets. What we can see that the Q analysis is working very well, even though some people commented to me that swing traders are losing money in the current market. That is not so if you are following a robust system and techniques with discipline. All the analysis I did on the global markets played out as I anticipated, and all those were low risk entry points. So even if some trades didn't work out, it would not matter. I just need 60% or higher success rate for swing trading to make a significant percentage profit at the end of the year on total equity. Now let's look at some of the stocks on the USA market, in the USA market that I shared in the past, and see how they worked out. In the last market recap, and I'm going to look at the USA market of course, but let's look at one stock that I shared in the last market recap. That was matchmaking company. I'm now using Q Elite on TradeStation. I shared the match setup right on this day. That was in the previous market recap. That was a long trade setup on this day. On this day, that was a flow trend following long setup, and it also had a gap setup. I shared it on that day, and I mentioned for gap, sorry, not for gap setups, the stop could be just below the recent, not recent, just below the gap candles low. The stop was not hit. Entry point could be somewhere here using real-time charts. And at the high, it probably reached the risk distance. Now, I wanted to share this trade for some reasons. Review this trade. It probably came very close or hit the reward risk ratio of 1. Assuming that it did not quite hit reward risk ratio of 1, what would a trader do? Would he exit the trade maybe with 0.9 or 0.8 reward risk ratio, or hold on to the trade? That is decided by the, at least for me, I decide that by looking at my market view and the sector industry view at the point where it is very close to my reward risk ratio of 1, from which point mathematically it says it is okay to start booking some profit. Now, what happened also during this time is that the central bank of the USA came out with the rate decision right on this day. That day closed bullishly. But if you are trading for a while, you know that we may, don't know why it changed to SPY, back to MTCH. We know if we are trading for a while that the market may adjust some of the moves the day after the central bank rate decision. If you watch the market the day after the central bank rate decision, that is on Thursday, you could probably exit the trade somewhere at this point, provided once again your market view was changing from bullish to bearish. Of course, when I took the trade, I shared the trade 1 week ago, both my market view, the stock view and industry view was bullish, so it was a 360 degrees trade. If that view changed, I could exit the trade with maybe 0.8 reward risk ratio near the high of the current move. But if my market view did not change, one would continue to hold the trade with the stop loss as planned originally. And again, even if the stock comes down now, hits the stop loss, that doesn't matter. One trade's result does not matter. The key is to trade with discipline using a robust systems and techniques. So both approaches would work. This trade came at least very close to the reward risk ratio, if not hit it, depending on your exact entry point. If you could enter using real-time data somewhere little below the high of the entry signal day, then you would have clearly hit the reward risk ratio of 1 and you would have exited as I do using GTC orders, good till cancelled order placed with the broker. Anyway, this trade is still in a profit and you may watch. If you entered the trade, you may watch it how it is moving. Now, in the last market recap, this was the only bullish stock I shared. And I mentioned that the market was getting overbought. It is still overbought. That was one reason I was not sharing many bullish ideas. In the market recap prior to that, I shared again only one bullish setup and only one trade setup, in fact, no bearish setup. That was 2 weeks ago, and that trade setup was TEX. On this day, if we look at the historical trend lines, it once again had a breakout setup and a gap setup. It might have had a squeeze move out setup pattern also. So that was a clear breakout setup and I suggested buying on this day, and of course the stop would be just below the gap candle's low. By now it has given maybe 2:1 reward risk ratio, and you would certainly, if you followed Q techniques, you would have booked at least partial profit by now. So that trade also worked out beautifully. Okay, somehow it is taking me back to SPY. Wait a minute, station. I'll come back to SPY for sure. So 2 out of 2 trades I shared in the market recaps in last 2 weeks worked out. During this week, the week that just passed, I shared one idea on my traders forum. How to access the traders forum? If you don't know that already, it is accessible from my website superiorprofit.co. Then go to the forum. Under the forum, there are multiple categories. One is about the trade checklist, the unambiguous checklists that I use to confirm a trade setup. One is FAQ. One is how to install Q systems. And here is the category where I share 360 degrees ideas in detail, similar to the Twitter posts, but sometimes I come to the forum to do a more detailed posting. all ideas I share are before knowing the results, and in this category I shared this stock 5 days ago. This stock was DVAX, and let's look at the charts that I shared at that time. You may look at the post later if you have not seen that already. There were some interesting observations that I made. This is the weekly backdrop chart of DVAX. We have in fact, two trend line supports coming from very far away. And you notice every time that trend line support or those trend line supports were hit, price held. These are very unique trend line supports. I doubt anybody will be able to draw them manually. Auto smart trend lines, memory trend lines. So I observed that the trend lines were holding very well. In fact, you could probably buy here, and I shared in the post that though we are analyzing the stock in 2023 June, these trend lines or lines were in fact coming from 2020, long ago. At the right edge, we had a bullish backdrop in the weekly backdrop chart, and the shape was also bullish, and I see it also had a bullish flow in the weekly interval. Weekly was telling us to buy, and right at that time in daily we had a flow, and now we are discussing a trend following setup, a flow trend following long setup, and that was the buy point. I also noticed when the weekly trend line support was touched, looking back at this point, the daily trend line support was also touched. Price went up from there with the unique headwind reversal signal and big move up 3, extreme bullish momentum with bullish pressure, bullish U-turn and bull release. It is important to look back also and study the charts to see at which points we could buy using unambiguous Q signals, and that would be a point to buy. But I didn't share it at that time. That is fine. We can still study the charts and get ready for the next time we will have similar set of signals. So I mentioned in the post the whole is more than the sum of individuals. So headwind is a signal, bull release is a signal, big move up 3 is a signal, pressure U-turn, all these are signals, and all of them culminated together at a trend line support in daily, at which point the weekly trend line support was also there. Risk was very small. That would be the perfect time you could or I could buy. And notice once again, this was not a trend following trade, isn't it? It's neither a pullback setup nor a flow trend following setup. It was a reversal setup, but as I mentioned, these setups in Q systems, be it reversal, sideways or trend following setups, all have very high success rate. So I could buy at this point. In any case, I shared the long idea right on this day at the right edge, and I also saw in the commentary it had a headwind reversal setup on that day, box sideways market or double bottom long setup on that day. Okay, sorry, no, not on that. That was on March 20th. That was the day when we had this culmination of signals. On this day, we could buy using the commentary or reading the charts. And on this day, we had a trend following long setup when I shared the idea. Let's see how DVAX played out. DVAX. I shared the buy idea on this day. That was a flow trend following long setup. Stop would be just below the recent low. This would be entry point. It has gone up enough to cover the risk distance, and we see it came to a weekly trend line resistance and daily trend line resistance. So one for sure would book at least partial profit in the trade using Q guidelines. Once again, a trade that I shared before knowing the results hit the profit target comfortably. Once again, Where is the difficulty in swing trading profitably if we are using a robust systems and techniques and ignore the chatters coming from the news media? Let's look back some more. On 18th May, I identified HTGC. HTGC. So whether it is the month of May, whether it is current month of June, the trades are working quite well. HTGC on 18th May. So here. Okay, here I think 18th or 19th May. If I look at the chart with historical trend lines on this day, there was a breakout setup in HTGC and I shared it at that time before knowing the results. That was also a gap up candle. Stop was not hit if you put it slightly below the gap candle's low, not right below but little bit below. On a closing basis, it surely didn't hit, and I wouldn't stop out of the trade by this day's candle for sure. And again, this trade also hit the reward risk ratio of probably 2 or more by now. And if I look at the weekly daily, this stock also came to a trend line resistance in weekly, therefore the trend line resistance was also there in daily. For sure we would book partial profit by the time it came to the trend line resistances. Once again, a trade I shared before knowing the results worked out. Somehow you can see TradeStation is shifting the symbol back to SPY on its own. I didn't do that. I'll come back to SPY. But I want to look at some regional banks. Remember when regional banks were doing very poorly. Many people were bearish, most people were bearish, and there was no traditional long setup. What I mean by traditional, no trend following long setup, no cup and handle long setup for sure in the regional banks. But on May 5, I posted this idea. By the way, all these ideas and my tweets are maintained for many years. You may look back to learn how I am applying the 360 degrees technique. On May 5, I shared this analysis on a regional bank. Could find a regional bank that insiders are buying. And I mentioned in the post that it does not have a Q buy setup yet. You may keep an eye on the stock for a possible setup in the coming days. I posted that on May 5th. Let's look at the analysis I did. On May 5th, Q Edge showed that the industry was one of the strongest and most accelerating. It was hugely up in terms of percentage move. I found COLB, a regional bank, with undervaluation, great earnings quality. Insiders were buying. The stock was up by 2.7% on that day, was paying a decent dividend yield of 6.2%. The company makes money, earnings per share is positive, and on that day, 100% of the 64 pairs of COLB, they were up on the same day. But remember, I told it did not have any buy setup yet. But let's see the Q signals that I studied and shared. And you will see the analysis that I did on the previous instruments is applicable to this instrument also, whether they were on global markets or not. In the weekly, I saw a cluster of bullish indecisions. This is what I saw in the China index also. In the daily, I saw a false downside breakout at the watermark pivot support. It was in fact creating a triple bottom, and there was a trend line resistance nearby, so we would wait for the trend line resistance to be broken before buying. I also saw jump thrust low. Remember, if jump thrust is at high, I stop buying. If jump thrust is at low, I stop shorting. And then all of a sudden at price extreme low also came big move up 3, big move up 3, big move up 3. These buyings, in my opinion, they were not from traders like me. But now I have the Q systems, I can see the footprints of where bigger players are stepping in to buy at extreme low price levels after price has dropped sharply suddenly. That is shown by big move up 3. That is not a buy setup, but I wait for a buy setup after that. So I observed all that. I observed the bull release and I shared the post that you may or I may get ready to buy when we have a confirmed low risk buy setup in regional bank. That was on May 5th, long ago. Let's now follow up on that. COLB. May 5th. I shared my analysis on this day when we had the bull release, we had the false downside breakout at the watermark support. We had the cluster of bullish indecisions in weekly prior to that. And I mentioned we may wait for a proper trade setup, and that came on this day using the unique headwind reversal signal. It created yet another false downside breakout at the watermark support. Price went up with the bullish headwind, bullish flow. Once again, big move up 3. It was not people like me that were buying at the very bottom. And now we had a proper buy setup. We had bullish pressure also, we had bull release also. So we had the building blocks of a headwind long setup as well as a box long setup. We had very high volume. So this was the day I was referring to, that we could wait for a proper buy setup day that came on the headwind day. Stop would be just below recent low that was never hit, and after that price had gone up enough to cover the risk distance. We could book at least partial profit by now. Even in the weakest, see again it came back to SPY. Don't hurry trade station. I'll come back to the USA market ETFs or futures probably. So COLB also made a profitable trade. So 1, 2, 3, 4, 5. 5 of the recent trades, and I was not sharing many bullish ideas, and you see whether it is in the worst performing industry or banking or in a reversing industry like matchmaking, online services, or TEX, I think it was industrial stock, they all made profit. And I'm going to share several ideas today also. But let's now look at the market. Why I shared these ideas in more detail is because someone mentioned that it is difficult to swing trade profitably in the current market. That does not seem so if you follow the analysis that I am sharing. And if I could do that, you could do that because the symbols are unambiguous. We don't have to look for indicators crossing thresholds because there is no threshold to be set. We don't have to look for convergence, divergence. We don't have to change intervals to see if divergence is there in this interval, that interval. We just look at the color coded charts, color coded industry scorecards, color coded fundamental scorecards, and align everything to our preferred trading direction to analyze, decide, take, and manage a trade. The most important part or the first step in choosing the 360-degree trades is to establish a preferred trading direction. And as I always say, my preferred trading direction, which direction trades I am taking, that is evident from the ideas I share publicly. And for quite a few weeks now, all my ideas were in the long direction, and I may change that this week, at least partially. I may share a long as well as a short idea. Let's start with, okay, we have the market ETF. TradeStation wants me to look at them, it seems. Let's look at the market ETFs, and I will also explain why I look at futures. SPY, it's in an uptrend, no doubt about that. The same analysis that I shared in the previous market recap, it is in an uptrend. Daily has a trend line support. If this support is broken, I may be more confident to short. Weekly has a watermark pivot resistance. If we have a false upside breakout at that pivot resistance, I'll be more confident to short. That will also mean that the weekly trend line support will be broken. But that has not happened yet. However, now I see, in fact, this is the first week. If you look back, this is the first week in a very long time when both thrust and jump are at extreme high level. So this move is not sustainable anymore. At least the past experience shows that, and I take my trading decisions based on how historically the patterns have played out. So I am going to stop buying now for SPY for sure, because both jump and thrust, not only one, both of them have hit the upper extreme. Now this is SPY, right? Let's look at the futures. Futures market is open now. I think Sunday night, though Monday is a market holiday. In the USA regular market, I think the futures market is open now. Let's look at the E-mini S&P 500 futures. I'm not going to look at the overnight market so much, but if TradeStation can show me the chart, as you can see, it is quite slow now. Probably not so much because of TradeStation, probably because of my system and network connection. Why did I come to the futures after looking at the ETF? Because there are some patterns that may be visible in the 24 hours futures market that is not visible in the ETF, as we can see clearly. The ETF S&P 500 SPY was well above the weekly watermark resistance. That is not the case for the future symbol. In SPY, it was looking like it would need some time to create a false upside breakout. In the future symbol, it is not looking like that. And you can see it is unchanged, practically unchanged in the overnight market on Sunday night, USA time zone. If it goes down next week, it will immediately create a false upside breakout in the future symbol. Daily trend line support is still there. I like that to be broken to be more confident about shorting. But the futures symbol is also showing jump thrust high. That's good enough reason for me to stop buying. You can see the difference in the charts of the futures and the ETFs. Let's continue with the futures then. Nasdaq futures, clearly in an uptrend. There is no chance of a false false upside breakout in the weekly anytime soon. We had a bearish headwind, but no trade setup. And okay, it's just the overnight market on Sunday, but we are forming another bearish headwind in the weekly. And I see interestingly in the daily on Friday we had a bearish headwind signal, not a bearish headwind trade setup. So I don't take a short trade. There was no setup. The setup requires more conditions than the signal itself, but the signal itself is telling me to be cautious. And here also I have jump thrust extreme high. So 2 out of 2 market futures are hitting jump thrust high. Good enough reason for me to stop buying. The other 2 market futures were not in an uptrend at all. Let's look at the Dow Jones futures YM. I showed it in the previous market recaps also. DIA or the futures, both were inside a triangle pattern, both in weekly and daily. And interestingly, if you see on Friday, this last candle is overnight market. It's down more than the S&P 500 and Nasdaq. On Friday, it came right to the trendline resistance in both daily, weekly, and stopped right there. You could in fact trade it in the bearish direction using futures or ETFs using real-time charts, separate chart, fine-tune entry chart, right when it created a false upside breakout at the trend line resistance level, and that would give you a profitable futures day trade. That's I use the longer term trend line resistances to take short trades using the intraday chart. The trend lines, in this case resistances, worked very well. If anything, I'm going to short YM or Dow Jones Industrials now. I will not look to buy it. But again, I don't like to buy the futures or the indexes or the ETFs. I can drill down into constituent stocks, find weak fundamental stocks at low risk short point and short them. YM is clearly telling me that not only it is not time to buy, it is time to look for shorts. And RTY, this was also not in an uptrend, it was in a very wide sideways range. It did break out of multiple watermark resistances, at which point the relative performance went straight up, showing for a few days, for a brief few days, 1, 2, 3, 4, 5 days to be precise, small caps outperformed for brief 5 days. Small caps outperformed, and then they are moving sideways, and the relative performance sharply came down, showing that now small caps are underperforming again. If we look at the longer term weekly, it's not in an uptrend, in a sideways market in the middle of a range, no trading area. Looking at the daily, if it can break below this support, which will also mean breaking below the white direction line, that will be the time to short more confidently. So I am seeing signs that are telling me to look for shorts, but not to short so confidently. That is why I am not going to share many shorting ideas. After looking at the futures, the external view of the market, my view of the market is indecisive. I may be able to find some short trades with 360 degrees characteristics in its favor, a long trade also in its favor. That's what you may do in an indecisive or neutral market directional view. We see RTY, Dow Jones Industrials, these two are not in an uptrend. SPY, QQQ are in a solid uptrend but showing very overbought condition. That is the external view. Let's look at the internal view. Let's look at the single page view of what is happening inside the market. Market breadth total view. Remember, I said market is in an uptrend, but when I looked at the market ETFs, some are in an uptrend, some are not in an uptrend. So why do I make a clean statement that market is in an uptrend? That is based on this market breadth total view candle chart. This candle chart is looking at the market from many angles, composites as well as major indexes, and if this is in an uptrend, I can say that again that candle chart itself is an external view, consolidated external view, that market is in an uptrend. I mentioned already in previous market recaps the Bango signals are firing thanks to Mr. Ian Woodward, may him rest in peace. they also are a kind of overbought signal, but looking at market internals. The percentage of stocks above 50-day MA, moving average, is in an uptrend. It is not at the overbought level yet, but the 3-month new high low is at or almost at the overbought level. I'll come back to some of these overbought conditions when I drill down from the total view into the different pockets of the market. Before that, let's look at growth versus value. Growth is continuing to outperform small cap versus large cap. For a brief 5 days or so, small caps outperformed large caps and now they are underperforming again. That's not a good sign. Many traders like to trade small cap growth stocks. Maybe they got excited for these 5 days for good reason, but now they are disappointed. Now, incidentally, though these whipsaw happened in terms of small cap growths going up, then coming down probably again, interestingly, the trade ideas I shared, they did all right or quite well, in fact. And the secret again is because I aligned all the forces, including fundamentals, sector industry strength, market strength, and trade stock strength in my trade's favor. That is the secret of the high success rate, even when others may be getting whipsawed. Now let's look at a bit more detail into the overbought condition of the market by looking at the 5 indexes, major indexes: Dow Jones Industrials, Russell 2000, Nasdaq 100, S&P 1500, S&P 500. And remember this internal view, external view analysis. Later on I will do sector industry breadth analysis. These are of utmost importance to me to decide my preferred trading direction. For Dow Jones Industrials, the 3-month new high low is at upper extreme. For Nasdaq 100, it has hit the upper extreme. Even for S&P 1500, very broad index, unlike Dow Jones Industrials and Nasdaq 100, is at upper extreme. S&P 500 is at upper extreme. Only Russell 2000 is not yet at the upper extreme, but very close to that. When all the 4 pockets are already at upper extreme, very overbought condition, and the 5th pocket, small caps are underperforming again, it's very close to the upper extreme. That is a time to be cautious. It's not bearish yet, but it is time to be cautious. Now let's look at the market still at the market breadth level using sector industry stock advanced decline breadth using Q edge. 1 month long term view bullish, just looking at the colors. 10 days long term view bullish, even 5-day is bullish. Today is even bullish, Friday it weakened. So 1 day's weakness does not change the trend. The overall trend, as we saw from market breadth total view candle chart, is still bullish. And we don't have bearishness. We may have overbought condition for sure, but no bearishness. Another overbought situation I can see from the bucket analysis, 80% of the stocks are above mid Bollinger Band in S&P 1500. That is clearly bullish, but that is also overbought. Now in terms of bucket extremes, the percentage of stocks above upper Bollinger Band, this is above mid Bollinger Band, that is looking overbought, but stocks above upper Bollinger Band is not at overbought level. It will be at overbought if the percentage of stocks above upper Bollinger Band goes to 30 or 40%. It is only at 5%. So it is overbought in one way, not overbought in another way. What about technical breadth? Also an important aspect of my deciding the preferred trading direction. Weekly technical breadth first, bullish, all signals, strength signals not technically signals, these are setups. Strength setups bullish, trend continuation setups bullish, reversal setups are mixed. So overall the weekly technical breadth is bullish, daily is bearish across all categories. That is a reason to start looking for shorts, and there are some other interesting signals here, insights you may say. Red candle high. Some time ago one gentleman, I never disclose the detail of Q traders unless they do so voluntarily. One gentleman, fine gentleman from the USA mentioned to me, and you may know that if you are using the HSI techniques, that when a large percentage of stocks show red candle high, that is a down candle at the high, that is a reason to be cautious. And now that insight is unambiguously readable from Q Finder technical breadth. This field will turn red if we have too high a percentage of red candle high. And I am running Q Finder here on the all liquid stocks in the USA market. So what is the exact percentage? 20% of stocks are showing red candle high. Yet another reason to be cautious. Now let's look at jump thrust high. I show that both S&P 500 and Nasdaq 100 futures are at jump thrust high. What about in terms of all liquid stocks, aggregate inside? This field will turn green when it is overbought, jump thrust high, and that threshold is 10%. Jump thrust high has hit 10% in aggregate for all the liquid stocks in the USA market. Yet another reason to be cautious, to overbought. And the third alert is coming from the bearish headwind signals. Again, this field will turn red when the bearish headwind setups now are hitting above the threshold of 1%. Now it is at 2%. So from the daily technical breadth, we have three overbought signals and reversal signals at the top. They are telling us to be cautious. And this is one single picture that is having the most influence in my preferred trading directional bias to say that I may start sharing bearish trades from now. And see how the different parts of Q analysis are coming together. If I did not have this technical breadth insight, I would not look for short trades yet. Yes, the market is overbought. I would know that from the other analysis I shared earlier, but this is the single graphical view that is telling me that it is okay to look for low risk short setups. So why don't we do that? I'm going to share, I am at 1 hour point. I'll quickly share two trade setups, one long side, one short side. They will be 360 degrees trade setups. I'll start with the long side on a pharmaceutical stock, well-known stock BMY. I'm using Q Vital to retrieve data for BMY from Refinitiv, all real-time data, nothing is stored on my computer, and calculate it fundamental scorecard. While it is retrieving the PR data, I may look up its industry. All these systems are integrated, looking up industry strength from Q Edge. Quite strong up industry on Friday, pharmaceuticals. The valuable insight comes from this industry score from 12-month period to 1-day period, and during market hours in real time I see that it was very weak, one of the weaker industries for a long time, and now it is gaining strength. That's a turnaround industry, and that's where I like to buy. It is strong and it is turning around. Let's go back to the stock scorecard. It is still retrieving the data about the peers, retrieving the peer data. So let's look at the technicals. For technicals, as you know, we could use Q Global as I'm using now, or you could use TradeStation as well for technicals. Let's look at BMY using Q Elite. It's a beautiful chart in my view for buying. Weekly is creating a triple bottom. We had a false downside breakout at this point, which gave us a very profitable up move. Now it is creating another false downside breakout, creating a triple bottom in the weekly, and beautifully it is breaking out of the trend line resistance with a bullish backdrop. This is the first weekly candle with bullish backdrop color, bullish shape after this up move. So we had a false downside breakout, we had an up move. Once that up move ended, this is the first week after many months that we have a bullish shape, bullish color candle with a very bullish breakout in weekly. And in daily, I see a very clear breakout from three trend line resistances with a bullish flow and a flow trend following long setup. The flow setup is interesting. It is not only a trend following setup, in some cases it tries to anticipate the trend change, and you can see we already have higher low. We don't have a higher high yet, but Q system is able to anticipate. This kind of flow long setup does not come all the time in all stocks, but when it comes, it is of equal probability of success as any other trade setup in Q systems. So it is giving me a breakout setup as well as a flow trend following long setup at price extreme low and reversing. You can see the subtle color changes. It's price extreme low and reversing. A lucrative point to buy for not only swing trading but also for long-term investing. Now, when I mention price extreme low and reversing, why don't I look at the extension chart? I don't look at the individual charts all the time because these band indicators get data from so many other Q charts, each chart showing different insights, and put them in the entry chart. But when I mention price extreme low and reversing, why don't I move to the extension chart? At the extreme low, it becomes in magenta color in this chart. Then it changes to bright red, then to dark red. After that, it will change to yellow if it continues to move up. And what I mean by price extreme low and reversing is these subtle changes from magenta to dark red, like it happened here. Sorry, magenta to red, like it happened right here, or red to dark red happened here and happening right now. Red to dark red or dark red to yellow. These subtle changes indicate transitions from price extreme low and reversing up. Those are the lucrative buy points. Also, when I came to this chart, I can see here it hit jump thrust low. So you would, or I would, I think we all would if we start using Q systems forever. Whenever, again, you see, whenever it hits jump thrust low or approaching that, I am looking for a buy setup, but by not buying until I have a proper buy setup. And if I go back to the entry chart at a glance template, for some reason, TradeStation is switching me back to futures and ETFs. Let me go back to BMY. See, when it approached jump thrust high, didn't quite hit it, didn't change the color to magenta, but it approached jump thrust, sorry, not high, low, at the lower extreme, at price extreme low. I'm looking for a buy setup, but there was no buy setup yet until right on this Friday. And I would like to open it using the commentary. Again, the value of the commentary is to read the chart just as a very experienced, probably the most experienced Q trader would read it. That is me. Of course, I am the most experienced on these systems because I developed them. If I use the commentary, I can see it has a breakout long setup on Friday and a flow trend following long setup. And if we look at the patterns, okay, now you see the value of the commentary. I already read from the chart that it was at price extreme low, but I did not read that it also had a bullish fan out pattern and a bullish squeeze move pattern. That is a lot of reasons for me to buy BMY confidently, no doubt about that. So this is a stock I would have bought at the close on Friday, and stop would be just below recent low. I would put my stop here. That is how I would analyze it. We didn't look at the fundamentals completely yet. Let's go back to the scorecard. Undervalued stock, earnings growth not going up, not going down also. The valuation is good enough reason for me to buy. The company makes money, BMY again, pays a dividend yield of 3.4%, and this one must catch your attention as it does mine. Notice this stock is at price extreme low and reversing, and funds are accumulating. It's an attractive, lucrative point to buy not only for swing trading but also for longer term investment. And if you are considering longer term investment, BMY has liquid options. You could consider shorting the put instead of buying the stock. I would be okay to buy the stock as well. So this was my long of the day. And again, the Q finder, that was the only market level analysis technical bread that told me that it is okay to look for shorts also. So why don't I share a 360-degree short idea? And because this is 360 degrees, it has to have weak fundamentals, weak technicals, weak industry strength. And I found a stock like that. Let Vital retrieve the data. Let's go to the technicals. The stock is IAS. How unambiguous are these techniques, isn't it? Let's look at it using at a glance chart. I am using Q Global on Metastock now. If you see the weekly chart, it is going up. Q techniques is very different from other techniques in this way. I am able to find a short setup in here. For 3 weeks, it could not go up. And if you look back once again, after this candle, which was at the very bottom of the down move in the weekly chart, this is the first candle with that much of bearish shape and bearish color at the same time. That is happening at the top. I like to short at the top, buy at the bottom. So I would love to buy BMY now, and I would not mind shorting this stock. The weekly is bearish color, bearish shape with a bear release signal and a bearish pressure. In the daily, it had a bearish headwind right at the very top. But that candle shape was indecisive and we had a trend line support. There was no short setup, but the bearish headwind would cause me to be cautious about buying. Certainly, I wouldn't buy a stock at upper boundary also. That is also approaching jump thrust high, hit jump thrust high here. So when I have jump thrust high, bearish headwind, I am looking for a short setup, but the trend line support did not allow me to short. On Friday, it had a huge gap down move, closed further down with a bearish flow. That is happening at price extreme high and reversing. The subtle color change showing that it is at price extreme high and reversing. Now let's look at the commentary. See if I missed anything. It has, as of Friday's close, two possible setups, bearish setups, where rich colors are always red colors or magenta colors in the system. Breakout short setup, breaking below trend line support, and also a gap short setup. Gap short setup has more conditions than just having a gap down move. So this is also signaling a gap short setup. So two setups, and if I look at the patterns, if you see the error message, that means not enough data was there. You may ignore that, no problem. But see the other bearish patterns. Instantly, like in BMY's case, the pattern analysis gave me much more confidence to buy. Well, the setups themselves are good enough for buying. Patterns are something you may grow affinity towards over time. What are the patterns? At price extreme high short trade. That's great for me. This is actually a reversal of BMY. Isn't it interesting? For BMY, I had price extreme high bullish squeeze move. Here I have bearish squeeze move. BMY had bullish fan out. I have bearish fan out. BMY had a bullish breakout. Here I have a bearish breakout. Here I have a bearish gap setup. BMY had a bullish flow setup. Very similar but opposite in terms of strength and setup. And this is my technical analysis of the short setup. Let's look at its fundamentals. Still retrieving peer data. Let's look at its industry in the meantime. Advertising industry strength is on the low side, down on Friday, opposite to BMY. More insight comes from the longer term score of advertising industry. Was weaker, was stronger earlier, now weakening. So again, it's a rotational industry, but opposite to pharmaceuticals. Pharmaceuticals was weak earlier, now strong. This is stronger earlier, now weak, and now I see it is also one of the most decelerating in terms of 5 days score. So industry allows me to short technicals, give me short setups, multiple of them with multiple bearish patterns. Still retrieving peer data. Let's look at the score in the meantime. Overvalued stock. Good enough reason for me to short, and it has very rapid deceleration in earnings growth. Yes, earnings growth is still high, but very rapidly decelerating. That's also a reason to short if you use Q techniques. And again, opposite to BMY, funds are selling heavily, not buying. Insiders are also not buying. I can see earnings growth coming down rapidly, down heavily on Friday. In fact, Friday was the first day we could short the stock after a long uptrend. Still retrieving the peer analysis, that is fine. We already saw that the industry score is weak. When I am running these YouTube sessions, my system is slower than usual. But we have found already one long trade, one short trade, and that I think is the, in my view, the perfect way to trade the current market, where it is very overbought but not enough bearish signals yet at the market internal external level, but technical breadth is telling me it is okay to start looking for shorts. And I found one 360-degree short idea, I found one 360 degrees long idea at the same time. The more you use the systems and techniques, you will start to have confidence in it and keep following it. Probably use the diary to log your trades if your emotions or news is affecting your disciplined following of the trading systems. You may use the diary to fine tune that. And once you do that, once you follow a robust system and technique with discipline, as I always say, as these live examples show, there is no reason not to trade profitably, do that. And thanks you for thank you for joining. I look forward to seeing you in my next session next weekend. Have a great weekend, and as always, again, trade profitably. Thank you.